Now, your first question might be, what actually is a short sale? And I'm going to go through this with you very quickly. It's very simple.
If you want to sell your house very fast for cash, then House Cash In gets the cash flowing.
Basically, a short sale is a program that the lenders, mortgage companies, lenders, banks have had around for over 20 years. And it's designed to let people sell their property when the amount that they owe on the mortgage is more than what the realistic as is value of your house is. For example, let's say you owe $200,000 on your mortgage. That's your payoff. But the comps in the area, the comparable sales in the area are showing that your property really right now is only worth about $150,000. That means that if you had to factor in a $200,000 payoff and add on about 8% to that, which is commissions and closing costs, I mean, you would have to sell your property for $70,000, $80,000 more than what other properties are selling for. Now, of course, no one's going to buy your house that way. Before banks started doing or allowing people to do a short sale negotiation or sell their house through a short sale negotiation, there was really no option. You were going to lose your house, and that was it. So actually, this is a good thing that banks have done, because what they will do is, obviously through a negotiated process, this is something that doesn't happen in 2 days. It can take anywhere between 2 to 6 months, maybe a little bit longer. But we try to get them done within 2 to 4 months as a general rule. But what that means is that we can sell your house for what the property is worth, which is, say in this example, $150,000, and the bank will pay all of your closing costs. So that means commissions for your realtors. That means, your listing agent and then the buyer's agent who brings a buyer. The title company, all your title costs are covered. So you have zero out-of-pocket expenses, which is good. So let's say the bank agrees that you can sell the property for $150,000. You find a buyer and you go through your listing agent files a buyer, obviously. Hopefully it's us. And then the negotiations take place. And then at closing, or before closing, about 30 days before closing, you're going to get a short sale agreement letter. And that is the document that states the terms of what the bank is allowing to happen. It will state that they will only allow it to be sold to a buyer that's been approved, what the price is, and there will be clear language in the agreement that will state that any money left over will be forgiven or be written off and forgiven. So that way you're not going to have any debt afterwards. Okay. Now, I wear 3 hats. I'm an investor. I'm also a mortgage broker, and I'm a licensed real estate agent. I can tell you, as someone professionally who looks at credit reports and deals with underwriters for people trying to get a mortgage to buy a property, the easiest way to get out from under a bad credit situation is a short sale. If people let the property go to auction, if they do a deed in lieu of foreclosure, or they try to do a bankruptcy, you're talking about 7 years before you could qualify for a government loan, which I mean FHA, Veterans Administration, VA, or USDA, which is the United States Department of Agriculture. Anything having to do with a government-backed loan, you're talking about 7 years minimum before you could get qualify for a mortgage. Short sale is only 2 years. So it is by far the option that has less damage to your credit, and it gets you out from under a bad situation with no money out of your pocket. So that's what a short sale is. And I hope you look at the other videos I'm going to have here on this site to give you more information about about the process, and so you can make an educated opinion about whether you think this is something you want to do, and if you feel comfortable working with us as your buyer and the people trying to negotiate with the bank. Okay? Thanks a lot.
If you want to sell your house very fast for cash, then House Cash In gets the cash flowing.